Welcome to the investment markets overview for the week ending the 28th of January 2022. The IMF released its latest quarterly world economic outlook this week, and cut its forecast of global economic growth for 2022 from 4.9% to 4.4%. It was an across-the-board downgrade, with the Monetary Fund lowering GDP expectations for the US, UK, the Eurozone, Japan, China and the emerging markets. The report leans heavily on COVID, the recent CPI rise and the supply chain disruptions that is hurting international trade, but only pay lip service to the staggering debt loads which, after the initial adrenaline rush, are the main reason for the GDP slowdown. The overview includes the performance statistics for the main stock indices, which were mixed, as were the commodities covered. Whilst sovereign bond yields were higher across the board and the cryptos lower in the main, excepting Bitcoin. Meanwhile, for the regions, a look under the bonnet for US GDP numbers pose a question. UK car production has been trending lower far before COVID. Whilst out east, an annual survey on economic optimism for Japan chimed with the socioeconomic observation. US stock indices plunged early on Monday, with the Dow Industrials down by over 1,000 points, only to reverse trend to end the day in profit. So what gives? A report by JP Morgan Bank says it was the dumb money retail investor buying the dip after offloading during the morning slide. Whilst another report by Goldman Sachs observes that the so-called smart money hedge funds were doing the same thing. In reality, a socioeconomist observes that it's a classic case of human herding, especially during periods of high stress and when everyone is on one side of the boat. Either way, as goes January, so goes the year, is an old stock market adage. If correct, then 2022 is set to be a wild ride. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. A one-month trial of this 40 times per year publication is available for less than $15, or the price of just one decent cup of coffee per week. It's an ideal opportunity to grab the bargain discount for 4 publications. We strive to turn the technical into plain-speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview.